And okay, it's turning, the recording started. Okay, so this here, all the lines, the support and resistance, we did that in the last webinar. I didn't change anything. Like literally, I didn't change anything. And or maybe I think I added those two white lines, but I added that later on, and I made a video about that and I posted it, I believe, or posted my analysis in the chat. But the red lines were the support and the white lines resistance here. And then I added those two because we broke those two supports. I believe it was over the weekend, 7th. Yep, it was over the weekend on Monday, but not. And then the market since 15th, since Tuesday, it bounced at pretty much the same level as it did previously. Okay, so we saw, I know for most, I know you probably know that already, but I'm going over trend lines just for everyone else. But with support and resistance and how the market moves, we saw the higher high, higher low, lower highs, and lower low. It's possible to link those highs together. So here we're on a downtrend, and we can link those lower highs together to have a trend line. And this trend line can act as also as a resistance trend line. Okay, so resistance trend line is well, it's like a resistance. It's above the current price. But when we have that, we want to look for what we call a breakout. So when we break above the trend line, and what's interesting here, when we gather those lower highs together. So let me get the circle. We have that dude here. We can also include this one here. Definitely have that here. Then 2 days ago, we were approaching that trend line, so we can expect a bounce at this resistance of this trend line, or we can also look for a breakout. Okay, I'm on the daily candle right now, so every candle is every day. So right now, obviously, we broke the trend line, and so what we want to look for is the next resistance, which was this lower high here. And what we could expect, or make a plan from this trend line, when we break above, we want to expect a pullback of the price to make, because here we made a new high. So technically speaking, like we broke out of the downtrend line here, at least here on the short term, right? But if we want to take the longer term, the bigger picture, we want to make a new another new highs to really consolidate this this theory that we will be in an uptrend. But right now, we broke the downtrend line. It went up, and we can expect, because obviously right now futures open, but we can expect a pullback and then testing this resistance. So we can look for that, especially tomorrow. Tomorrow is the third Friday of the month, which means a lot of volatility. Option expires tomorrow, and there will be, I guess, a lot of people selling their expired options or exercising them or whatever, and we could expect a lot of volatility on that zero DT, zero expiration date. So tomorrow, for at least for the Nasdaq, it's possible that we can, test the 14,200 area. Can NQ move 200 points, $200? Absolutely. Yesterday it went to 400 up to 14,000. So it moved 600 points. So NQ definitely has the power and the energy to move at least 200 points. So it's totally feasible. Okay. The other scenario we can look at when we break out of those trend lines is like a fake out, meaning we broke out of we broke out the trend line, but then A fake out means it doesn't go the expected direction or the planned direction we have. So it comes back to the trend line, to the previous support here. It attempts to go up but loses momentum, and then it's gonna go further down. So it is also a scenario to look for, but kind of easy to say, oh, it's gonna go either up or down. That's the only option, two options we have in the market, yeah. But the fact that we can expect somehow a clear picture to happen, we're looking for a new high and a new low here for an uptrend. We can better, I guess, take position in this market. So let me take a 4-hour candle to see. I'm gonna take out the volume or space, and I'm gonna take this off. So for example, here, I can see also the previous support. They acted as resistance recently, okay? And so it's not a coincidence. The previous support on higher time frame, they will usually be retested. And so this support here, we can probably expect to be retested, and then we want to look at to hold it, to go higher, to go to that 14,200. And the trend lines will help us to identify those big motion or big movement or momentum, like where we can catch a momentum. Now, I showed on the higher time frame, which is daily and 4-hour, but sometimes we just want to hold a trade for 5 minutes or 15 minutes. So let's look at those smaller time frame. Remember, always use the higher time frame to lay out support and resistance and trend line to have an overall direction of the market. So on the 4-hour, we just recently broke that downtrend line. Okay, we can expect it to go higher and to retest this next resistance. We can expect it to go test the support, or it can also range in this in between those two. Okay, it might not take any direction. So let's take the 15 minute better. 15 minutes. In the 15 minute here, we have somewhat on an uptrend. We can see a higher high, higher low, higher high, higher low, higher high, higher low, higher high, and then it made a new low. But yesterday was kind of an exception because it was an FOMC minute and the Fed meeting. So I would consider that as well. But look, when we put the trend line and connect all those dots together, even though we made a new low here, it did not invalidate the uptrend, the current uptrend. Okay, it just went back retesting this trend line here. And then today, earlier this morning at 10:30 a.m. EST, it went and tested this this trend line. And so market opens at 9:30 a.m. New York time, which was right there. It went up, then it went down, retested that uptrend line on the shorter time frame, which is traceable. Now you good, which is we can see from this low to the FOMC low and go here. And so on this 15-minute, we can probably expect this trend line to hold, depending on how other markets are doing, like London and Shanghai. How will they do? Or we can expect this support and then retesting this uptrend line. So uptrends, they're very good to see the current direction of the market. And when we couple that with support and resistance, it's a lot easier to take positions, because if I have an uptrend, a current uptrend, I want to look for a support to take a long, and then the reverse will be, if I'm in a downtrend, I want to look for resistance to take a short. Mm-hmm. Yeah. Right. Right. That's a very good point. I wouldn't say I took wider stops, but more with all that volatility lately, I would say that I relied more on the higher time frame than the lower ones. So I would look at the hourly and the 4 hour time frame more often now than the 5 and 15 minutes, just to have a bigger picture of strong supports and strong resistance. Mm-hmm. Yeah, it's yeah, it's been tough because of all the unpredictable news lately. But let's take that example here, the FOMC. It's that candle here. That candle is huge. Like it is bullish. It's a bullish candle, but it went down. It went like 700, 600, 300 points, $300 down, and the support that it bounced from was from a daily time frame, and is dated from it's from June last year and February this year. So like those higher time frame are way more useful in this time of uncertainties, because um like if you have crazy news like Russia attacking Ukraine and that's gonna mess up all that supply chain and supply and demand, then the market will look for previous, I guess, not on the hourly, not the 4 hour, but like stronger support. And the higher your time frame, the stronger the support and the resistance will be. I will even go further and say on the weekly candle, looking at those candles here, that support here, that current support of this week, is from May last year. And so, yeah, exactly. That's like, wow. Uh, the higher the time frame, the stronger it is. I would not use the monthly candle. I would probably be curious about it, you know. But because overall, I mean, it's just exponential. It's an exponential. Maybe the monthly. The only thing I would do with it would be doing a Fibonacci retracement to see where we're at. And currently, we are the first Fib level, which is actually impressive. But I haven't covered that. I haven't covered that topic yet. Actually, look at that. That is insane how to the tick it is. The current candle went to the first. Yeah, that's pretty. I haven't noticed that. So bottom to top, pretty interesting. Interesting. And GPs. Yeah, yeah. I haven't covered Fibonacci retracement yet. More so because it's a more advanced topic on the support and resistance. But I do want to talk about that on the next week, because now we've covered higher highs, all the highs and the lows, trend lines and support and resistance. Go ahead. Sure, sure, sure. Good, good. Right. Um, that's a very good question. I'm not sure if OBS can record what you said, but the question was using Fibonacci, and so if I can understand, do I go right away at certain levels, or do I wait? Like, how do I take my positions on Fibonacci? Would I be right? Right way to summarize. So let's take this example here. Maybe take that out. Reach from here to here. So that would be this bottom to this top here. So just to make it more clear, circles. So this bottom here to the top here. Okay. So oddly enough, you can see that the retracement not perfectly bounced, not a perfect bounce from GP, barely bounced from the golden pocket, and it went up to it went to retracing to GPI as well. So 618 is the mathematical number for the golden ratio. Okay, so right here, I guess you have, that is also crazy. I haven't seen that, but what's crazy about it is the whole retracement followed the golden ratio. But to answer most question, I will not enter a position like right away. What I do is I always wait for the closing of a candle and see how they close at those certain levels. Like for example here, I don't think I enter any positions, but if it goes near GP, the golden pocket, the golden ratio here, I would wait where it closes, and then it closes below. Like probably not, I will not take it. But then next candle, it's a green one, so I'm still looking at it. And these two candles together, they're forming a Hamari pattern. It's a bullish formation candle near a support. And so I'm looking at it, right? And it closed green at GP. So I'm considering it, but not yet. What I want to look for is actually confirmation. Because I like when I'm seeing those levels, okay, I don't want to enter right away, but I want to enter on a momentum or a breakout. And so I would probably look at those like highs and resistance here. And if I see enough momentum, for example, on this candle here, breaking out of GP, of the golden ratio, then with this current price action, that's where I would enter a position, even though I did not enter, because I don't think at that particular moment I wasn't watching it. 17 was today. That's what I would recommend. Yeah, I always, and that's what I do. Like I take positions based on the price action, meaning what type of candle I have, and that's another subject I'm going to cover later. And but right now, with the support, resistance, and the trend line, and the highs and the lows that I can see, right? That's what I will look for. Like when I say I'm looking for, no, I'm watching the close of a candle. I'm waiting to see if it's making a new high or if it's making a new low. So if it's making a new low, probably not. I don't want to take calls along, because if it's making a new low, there's bearish sentiment, so there's more selling happening. But if it's making a new high, then the sellers, they're trying to step in. Yeah, but it's very rare that sellers will step on the first try. The sellers, buyers. It's very rare that buyers will come right away, because you have so many buyers in the market. You know, they cannot talk to each other. Imagine that, millions of buyers together and just talking. It's just cannot happen. And so you have a few strong buyers that will initiate the first momentum, and then you know they will take profit just in case, and see if others will follow through. And so that's why you have those new highs, and then you have a new higher low, and then you have a new higher high. So probably I never will enter. Go ahead. Okay, very good question. It depends at when you're looking at the candle. So if I'm looking at a candle and I see the time, it's like, let's say it's 11:49. I would usually look at the 5-minute and the 15 or the 15-minute, yeah. But when you arrive at the close of an hourly candle, I want to look at the hourly candle, like what type of hourly candle I'm in. Okay, because on the smaller time frame, on the 5 minute, it can show you an uptrend. Like I don't know if I can have an example. The 5 minute can show you an uptrend, but you can totally be in a very ugly candle. Actually, let's take FOMC. I can have that example right there. Yeah, right here. So like FOMC here, I know, I know. I'm looking at this low here, right? And I also have that support below. And so if it goes down and it's testing that support, and so if I'm only looking if I'm only looking at the 5 minute, I'm right there, right? I don't know what happened after. And I see that, oh, we broke that support here. It's going lower. It's gonna go lower because I just made a new low, right? And so I'm looking at this candle here, at this formation. So it went down, made a new low. It tried to go back up, but it did not. It's going further down, like so, right? And so I'm like, okay, I'm gonna go short because technically speaking, on the technical side analysis, I made a new low, which invalidated a scenario of going up. But when I look at the higher time frame, like when I look at the 1 hour, where is it? There you go, right here. When I look at the 1 hour, sure, at that moment I can be very, very low, but I can also understand that, oh, there's a support here. Okay, so there's a support area here. So like, okay, it makes sense because yeah, and the uptrend was the slope of the uptrend was very high, and then it just pulling back, right? And when I look at the pullback on the Fibonacci retracement, I bet you it's gonna be a 50, pretty close. Maybe not. It's gonna be the 30, 38 too. So the second level of Fibonacci. So like I do look like right here on the 5 minute. Probably not because where it is. Keep on losing that that moment. Right there. Okay. Because okay, see that 5 minute candle? It happened at like 1:55 p.m. Yeah, 1:55 p.m. Okay. And it's very close to a new hourly candle. And so if I'm looking at the 5 minutes and I know we're about to close the hourly candle, I want to look at the hourly candle. Like that's what I want to do, okay? But if I look at like, let's say 1:05 p.m., right? I will also look at the candle, but let's see. Keep on losing that moment. There we go. It's at the arrow here. And so the 1:05 p.m. that current that candle here doesn't really show strength like compared to the previous one. The previous one was very red, but this one compared to that one doesn't really show strength. However, there's been a little bit of selling, and then it's looking bullish. That candle looks kind of bullish, right? But at the same time, it's not an engulfing bullish candle. So first, I'm not at a support. I'm actually at a resistance, right? I'm at a resistance level, right? Right there. Okay, and so going long right now is very risky, mostly because I don't want to go long or take calls underneath a resistance. I want to take it on a breakout of resistance. So when this happened, when it breaks out, yeah, that's all I want to do. I want to take a call here, but below it, and with the price action and the candle formation and like what type of hourly candle it is, maybe not. And so I am looking at the 5 minutes, but in the context of the hourly candle. Makes sense, like both together. So like I can have that on my screen, NQ, and then I have the hourly on that side. Perfect. So like I have an overview, a general overview of the trend, but then deeper on the in the candle, within the candle, I can look at actually what's happening. Make sense? So yeah, it's possible, it's possible, but it's possible to look only at the 5 minute. I see a lot of people looking at the 1 minute. I don't know how to do it. It's like very volatile sometimes. Like, mhm. Right. Mm-hmm. No, yeah, I mean, whatever works, right? But like for me, the 1 minute, I don't some. I only look at it when the volume is really low. Like right now, Globex time, meaning it's not regular hours. I'll probably look at the 1 minute because there's not a lot of participants. Look at the candles. It's so dry. The market just opened 30 minutes ago. But yeah, that's probably the only time I would look at the 1 minute when there's not a lot of participants, just to see just to see the actual movement, what we're doing. And so trend lines, yeah. Okay, that was the one thing I wanted to talk before going into, I guess, what's going on. Why is everything going up? With not only we have a 0.25% interest rate. I heard some people saying it doesn't make sense. We have rates increasing. We're planning to increase more the rates, but everything is going up right now. So, and there's so many to talk about. And that's the one thing I started to talk about with you most before, or maybe at the beginning or before the recording. I don't remember. But futures market. Oh, yeah, that as well. I want to clarify what it is and how to trade it, because a lot of people had questions on Top Step and whatnot. So futures market again tracks the price of a commodity in the future, which can be good because you can buy something really cheap today, and then in 3 months it's going to increase, and so you made a profit. So you bought something and you saved money, right? It is good for governments, airlines, companies, because they have oil, they need to get to buy gas and whatnot. It's good for governments because they can buy corns, wheat, what else? Potatoes, gold, silver, copper, all those commodities. Now, NQ and ES, mostly NQ, sometimes it's kind of hard to see what it is exactly because NQ tracks tech companies. It's not really a raw, like something that you consume. And so we have to dig a little bit deeper into that. But I want to keep it really simple because it can get really complicated. But first, I want to talk about current situation between Ukraine and Russia and why why that conflict has been very volatile in the futures market. So Russia is a huge exporter of wheat and oil and also gas. That's their main economy. The whole economy is based on selling gas and oil. Ukraine is the first exporter in the world of wheat. You can do a lot of things with wheat. Okay, you have flour. You can feed cattle for farms. Okay, and so knowing that Ukraine is the number one provider for wheat, the whole world, Europe, China, everybody just buys mostly from Ukraine. Russia attacking Ukraine and destroying most of their agriculture plants or most of their lands, it's going to reduce the amount of supply, of worldwide supply. So you have that one conflict here that affects a global supply of wheat. Actually, I forgot what is wheat future ZW. Interesting when you look at that. So on the daily candle, I'm sorry. Sorry, I could not catch it. Say that again. Oh yeah, yeah, yeah. And trading those are really hard because you have to keep up with it's mostly fundamental analysis because it's a raw material and you have to keep up with import export of international transaction. And so I don't know a lot of traders that trade actual raw material like wheat or copper. I've met a few that do silver and gold, but even it's really hard because you have to go through so many fundamental analysis, and that is reports, that's news, geopolitical news, political news, and today we have the big Russian-Ukraine war going on. But back to the topic where Ukraine's they might not get as much harvest as they were planning because of this conflict. So what does that mean? There's less supply. What does that mean? Well, if the top one provider cannot provide as much, of course the others, they would be here to try to help out. But what will happen to the price? It's going to drive the price up. And now, what does that mean for the rest of the market? So you have wheat on one side that goes up. With wheat, what do? We do like the necessities: flour, bread, all those. And so it will affect other companies and even smaller companies because the prices will go up. It will also affect meat farms. You will need wheat to feed cattle and whatnot. And so if those increase, well, farms, they will have to cooperate even more with governments because prices go up. The governments will be like, okay, we can give you that much help, And so you have that huge conflict here. And it's even more interesting that it's happening in Russia and Ukraine, especially after COVID, because like I was telling Moose before recording, I'm pretty sure, because of COVID, most of the shipment by boat have been reduced, even though we're trying, a lot of countries are trying to do their best to up their efficiency. Like, for example, the ports in California, I believe it was the first time that they were running 24/7. And even doing so, they had like thousands of ships just waiting on the bay. Okay, and because they could not unload and load the containers. And so because of that, you need to find alternatives. The one alternative, at least for Europe, was using trains, or use trains more often. They were using it. The problem was that the train tracks, they go through Russia and Ukraine. So right now you have that huge problem where there's a war and they can't really move commodities around. And so not only do you have less commodities, but there is no real way to move those around. Okay, and it's the hardest thing right now as well. On top of that is the sanction that Russia is having. The more sanction they have, well, the less, it's not only going to affect Russia, it's going to affect everyone, and even the United States. And so it is a real chess game happening right now. And so that's why futures has been, very volatile and giving a lot of lately it's been doing 3 to 4% on a weekly basis, which is insane. Usually NQ moves, like, you will be lucky if you go 2%, even in COVID time when the government was giving free money to a lot of businesses, right? And but right now, today, what yesterday, I think it was like 3.5% or something like that. Yeah. 50 points is a what? How much is that? 50 times 20. Yeah, 50 points. That's $1,000. That's another topic because yeah, I haven't talked about that yet. I want to talk more about that. So 1 point, it's a dollar. Okay, it's $1. But in the futures market, because you're trading future prices, $1 want is not worth. Yeah, it's leverage. Like it's like an option contract. $1 move, the delta value of $1 in future for Nasdaq is the equivalence of $20 profit. And so when the price moves $1, the profit will be $20. And so every 25 cents, right? Yes, every 25 cents is worth $5. Simple math. So every 25 cents is worth $5. And you have the fees, but the fees is like what? $3 or $2. And so the fee is already covered within one tick, one move, right? And so if you take one tick profit, well, you have a little bit of profit because the fee, you have the fees to pay. However, what I want to like go back on is the moves we have on futures on Nasdaq and ES, which is the overall market, US market. It's been moving a lot, as much as 3%. It might not seem a lot for those that are not used to it, but on an average, futures would move between 0.5 to 1.5% in either direction. So it can be negative 0.5% or positive 0.5%, 1.5%. Yes. But right. Mm-hmm. Yeah, the overnight on future. Yeah, the hard part is, and that one is Europe lately, because most of the news and everything is happening in Europe. So all of the moves lately has been happening overnight when France, London is opening or even closing or during the day. But most of their moves, like we would open a gap up and a gap down because of Europe, like what's happening over there, and they have first hand on information, the closest one to those information. So it kind of makes sense, that they're profiting from that. But like you said, last year in summertime, future was pretty dry. I think it was because as well, the current situation. What was happening? Don't quite remember. Yeah, I don't think not. I don't think anything was happening actually. Like, it was pretty dry. Probably, the government was probably looking at a COVID relief. Yeah. Um. Yeah. A new administration. But that wouldn't affect futures too much. Not that much, at least. As Yeah, yeah. Um. But yeah. So news. I guess the key takeaway here would be news is driving the market very easily, a lot. And so when there's nothing happening, yeah, I don't think it's wise to to take positions, because if you take a call or a long or a short or whatever position you take, and then the news come out of nowhere, it can easily reverse back. Like, who would have thought that the conflict will actually happen, like that big of a conflict? Um, Mm-hmm. Mm-hmm. It's yeah, it's a very good point. Most brought. I guess the first one was volume. Some people may ask, what's volume? While volume records the amount of participants you have in the market or the amount of trades happening, but you can it's the equivalence of participants. You know, past participant or current participant in the market. So it's shown with those bars here. Oh yeah, yeah. There's different ways to say it. The most is saying that there's buying and selling volume. You can look at the exact amount of buyers or sellers. That was probably need to look more into depth into exactly what those mean. Um, but basically, just buying selling volume. You need to see who is selling, who is like how much sellers, how many buyers, how many sellers do we have in the market. So that way, this candle, for example, sometimes you can I would say you can ignore the volume here, FOMC. A lot you can see red, but then like Moose said, you can also see there's a lot of buyers here, not a ton of sellers, but it's a red overall. But also look at the current candle. This candle in FOMC, extremely bullish. I mean, it is just it's hammer bounce off of support. Everything is just showing a lot of strength. But it's also really hard because Fed meetings, FOMC minute. So there's a lot of news you need to keep up with and reports and stuff like that. So I usually, when those things happen, I will usually wait 5 to 15 minutes. But this one is an isolated case because FOMC meeting, Federal Open Market Committee, is that how it stands for? What it stands for? Something like that. That's for volume. So yeah, those news sometimes we can't really understand. It's kind of hard to understand how they would affect. Like NQ, how would wheat affect NQ? I don't think it would, honestly. So we need to look at other aspects of international trades or interaction. Um, NQ, you can look at how much blue chips are being produced for the import and exports of countries, because obviously NQ would be the US technology market. Okay, we have Apple, Microsoft, all those big market cap. We have Facebook, Nvidia. And so if you want to look more individually, like Nvidia and AMD, not AMC, Intel, so those chip companies, we could look at blue chip manufacturers, not a whole lot in US. That is why in Ohio, the current Biden, uh, when he was so proud to announce they're gonna build a factory in Ohio to build chips, because I think it's clear to say that, and it's usually the general consensus that the United States doesn't have a lot of raw material. Um, I mean, you can see that when COVID happened, and uh, there was a there was a lot of fear that we'll be missing a lot of product because we're not importing as much from China or other countries. And so the fact that they're building factories in the US to provide more chips for local business, meaning by what I mean by local would be those big companies, yeah, Intel or Facebook or Apple, Google, because those companies, they need data centers, data warehouse, and they will rely a lot on those raw technology material. even though it's not really, you know, what we look for in the first place. Like when I talk about Facebook, the first thing you think of will not be data center. Okay, it won't be that. It will be the actual data collection or the code, but that's not a raw material. It's a digital material. It doesn't have much value in it. What has value is the actual raw material where they can store their information. That is hard drive, SSDs, servers, and those have a price. And currently, they are high prices. Okay, it's pretty high. Like computer chip are expensive, and so the fact that we're building more stuff here to provide those raw material can be very helpful for those type of companies. It's just an example, okay, an example of what can drive and queue those companies up if you want to look at a fundamental side. That's why I brought the current conflict between Russia and Ukraine. We have wheat, corn going up, oil prices going up, okay, because right now it's kind of hard. It's kind of hard to move oil around when a lot of the train tracks, ships, the shipment is just stuck. Oil is there, but the shipment, we cannot get things moved from point A to point B safely right now because there's a huge conflict in the other side of the globe. So their supply is here for the moment, but it's just a matter of moving that around. So those can be huge, key things to have in mind right now. Lately, overall, with yesterday the FOMC and the Fed meeting was interest rates, and so the federal government or the SEC, well, no, Jerome Powell is thinking of. They talk about it. A very interesting talk. And so they increased rates by 0.25%, which was basically what everyone was expecting. That was the expecting number they would bring. And so it wasn't bad news, but I wouldn't consider that good news either because they are increasing interest rates, which means that the current value will, the current price right now will be less in the future. They're increasing that. And so on that side, what I will look at, and it's not really intuitive, but when they increase those rates, I usually look at banks and mortgage and the interest rate they offer, because more often, and I'm pretty sure that mortgage, the rates they have on mortgage to follow the 10-year yield very closely, very, very closely. And so because of that, they will not want to lend as much money because they're trying to fight inflation by keeping the rates up. Okay, so right now it's a fight against inflation. And Jerome Powell said his statement was that he does not believe that the recession is in sight. Maybe rough times, and they're expecting a slow growth compared to previous year. But I find it very unfair to compare the growth to COVID growth, because COVID was it's not a normal growth. Like the market went up 20% the second year, the first year went up 10%, and so those numbers, well, 10% is the average, but 20%, that's just not. That's an outlier. And so some of their statements were comparing to the most recent years, but they do not expect a recession to happen. What they expect to happen is a very slow growth because they're planning to increase the interest rates. And so they're doing it right now by 0.25%. They also said, the thing that they were not clear with is that there is going to be the next meeting they have about that. We don't know if they are going to keep increasing those rates. And so that is definitely something to play by ear, because they said that they are going to do it. Well, they are strongly thinking of doing it, but it's not like 100% sure. Okay, they can keep the current rates at the current level, which can keep the price, the market up right now. But if they keep on increasing all the interest rates, and then you add up a 0.25% all the time to reach higher percentages, it's going to bring the growth down, which means sure we can have those uptrends right now, like we're heading right now. Okay, we have an uptrend. We're going to test that 14,200. But then when we look overall, like overall over the year so far, it's been red. The year growth of the market is red. So maybe on a shorter time frame, sure, there's some growth there, but so far in the third month, Q1, first quarter of the year, almost the end of the first quarter, it's red. Market is pretty bad red. Is it going to continue to go up? I really don't know, honestly. There's a lot of uncertainties, and so that's one thing that also keep in mind, that there's a lot of uncertainties on the news on what's happening in Europe, and whatever happens in Europe is definitely going to affect the United States, because again, USA doesn't have any raw material to rely on. They just rely on the rest of the world. So, and I will, I would even say whatever happens over there will happen twice as hard in US. Maybe not now, but it's but that's speculation. Yes, yeah, very good point. Yeah. Not yet. That's a very good point. Yep, yeah. I think that was one big reason. I agree with what you said, that the market went up because things just went as planned, and it's a good thing. It's a very good thing that we go as planned. Like, sure, we might increasing rate, but we increased rate, and we're expecting that number. The market expected, the overall consensus, they expected to be a 0.25%, and so it's like, okay, it was already priced in. So okay, like we're ready to take those numbers into consideration. And what you said about China is a very, very good point. Like, it might be China might be in an early stage of like what's happening, and then it might be happening, yes, but it really depends on how things turns out. Like, it's I don't know, it's really tough. That's where you get into the weaves in fundamental and geopolitical tension on how things turns out. That's why I don't rely too much on fundamental analysis, and I usually just rely on the charts to take positions, because yeah, really, like, exactly. And that's why I really, like, I swear by a technical analysis that is just let the chart speak, and whatever happens, because you can't control it. I can't control the conflict over there. I can't control what China is doing. Like, China being down 30% overall on the year, can it happen to the US? Yeah. I mean, it's possible. It's definitely possible. And if it happens, that would be a recession, be a tough time. So what I want to do, because it's already 8 p.m., it's been an hour already. I want to do a small analysis on NQ and ES. Do it on ES first. Not nerd. Yes. Go. ES as well, you know, respected the previous support here. Very, very interesting movement the last time. We're just testing the supports here. So I already have those here. 1, 2, 3 times. And currently I'm gonna take those out. They were mine. Okay. I'm going to put one right here. That's the current resistance I would look for because it's right underneath. If we end up breaking that resistance, well, I will look for the next high, which might be here, here. If not, I would look for a pullback and testing that support right there. Put that in red. So, taking in consideration as well the previous, the current price action. So there is an trend, very steep slope here. So what I would expect is a pullback. It's giving the market some time to rest and to digest what happens. So it's just straight up, probably something like this. Assuming nothing bad happens. That is assuming with the current news we have right now. I'm not gonna use Fibonacci yet. It's going to be a topic for next week. So that's what I'll be looking for now. Yes, it's the S&P 500. That's usually the main indicator for the overall market. So I would expect a pullback to happen. Maybe not that low, but somewhere here to that candle right about there. So that range, the range between those two red lines, is a potential support. I would want to look for interesting action, especially tomorrow, because tomorrow there is going to be a lot of volatility. And Q, I'm going to take off those rectangles to have it able to read the chart. Right, Q on the hourly candle. We have an uptrend on the hourly, and so I said previously that I'm expecting NQ to test 200 levels, but I'm most expecting to see a pullback probably here and then go back to that level over there. Very pretty simple plan or view here. Because of the current uptrend, I want to see the market to pull back to digest this momentum, and then finding more buyers from the previous high, so the previous support right here, which would be that red line. All right. Datey, do you have a question? If you missed some stuff from the beginning about Trendline, don't worry, it's being recording right now, and I'm going to upload it and just share the link in the group. But it's very easy to put a trend line. You just want to connect the highs and the lows together, like so. So you have one here, one here, one here. So you can see an uptrend, and you can also see like those highs here. You can connect them together. Here, here, here. It doesn't have to be perfect. What you want to do is to see an overall. You don't have any questions, no worries. You don't have any questions. Fine. But trend lines are very easy to trace. You just want to connect those high dots together and those low dots, low points together. Again, it doesn't have to be exactly perfect. You just want to have an overall view of the current trend line, the trend of the overall trend. And when you break out of those trend lines, so when you go past those trend line, that's where we want to see to take a position or to see a interesting move. So right now we have a small triangle, and so what I'm expecting, like I said, I'm expecting a pullback. So breaking this trend line. I'm gonna put it in orange, but then I want it to go and retest that uptrend line, which will coincide or be at 200 level, so 14,200. Now I'm doing it very fast, but that's because I'm kind of used to use those trend lines, but it comes with practice. You need to like notice those lows here, and that's why last time I went over what is a lower low and what is a higher high, because you need to identify those lows together to be able to trace those trend lines. So yeah, I guess that's it for today. I'm going to stop the recording and then upload the video shortly